As market information gets incorporated faster and faster into prices, the opportunity for instant moments of panic has likely increased. The morning of August 5th, 2024 is a good example of this dynamic. Starting late Sunday night in the US, the Japanese stock market dropped over 10% in a single session, and US stock futures were down over 3% or more to start that morning. What caused this large market move is up for debate. However, investors would ideally like to have a portion of their portfolio in a fund that might react positively to such events. In our opinion, the Alpha Architect Tail Risk ETF, ticker CAOS, is a great option for days such as August 5th of 2024. CAOS is an ETF that seeks to deliver positive returns in normal market environments, while also providing investors with tail risk protection. But what was going on within the fund? To answer that question, I brought in Joe DeCipio from Aaron Risk Advisors, our partners on the CAOS ETF. Joe, I had a few questions about CAOS on August 5th of 2024. So first, within the fund, how and why were any trades made on that day?
Well, within the fund, as you may remember, we own a large number of deep out-of-the-money puts. So what happens is they're very sensitive to changes in volatility, and we did see a change in the volatility environment on that date. There's been a lot of speculation as to why that change occurred, but it was kind of a short-lived event, and most of that activity occurred in the pre-market time frame.
Okay, and so it sounds like you obviously noticed this change in volatility. So did you make any trades that day?
We were able to get some trades executed on some of our nearer term out-of-the-money puts, and those were the ones we sought to monetize as much as we could during the pre-market and early trading hours.
Okay, and so it sounds like you decided to monetize and sell at a gain, which was nice, some of the protective puts within the fund. What percentage of the protective puts did you end up selling during the day?
We were able to sell about 50% of those near-dated puts, and then the remaining puts we kind of held on to because, again, we weren't sure whether this was an air pocket or a bird strike into the market. So we like to keep that long volatility in place in case something were to follow through. In this case, it was a fairly short-lived event, so we were able to get about 7% of those protective puts monetized during that period of time.
Okay, that's great. So going into the day, if you had 100, you would have sold 7 or 7%. So my last question then about the trading activity during the day is it appears that you ended up then not selling all the protective puts. So what caused you to stop selling the protective puts within the fund?
Just as much as there was a sharp uptick in the level of volatility, there was a sharp reversal in that level of volatility. So options that were trading on Friday for maybe like $1.30 or so had spiked up into the $6 range. They quickly reversed course back down in that $2 range almost immediately after the market opened.
Okay, and so it's a good thing for investors to know that within the fund, you did maintain a decent amount of the protective puts by the end of the day. Is that correct, Joe?
That's correct.
All right, well, Joe, thanks a lot for helping answer some of the questions about some of the activity in the fund on August 5th of 2024.
My pleasure. Good speaking with you, Jack.
To learn more about the Alpha Architect Tail Risk ETF, ticker CAOS, head to alphaarchitect.com/funds/chaos.